Okay, folks, let's face it, you've either been a complete bear or a bull on the Tesla case. And I have obviously been in this stock since 2019. I was bragging, ranting, and buying in May at the lows. I'm pretty much getting close to doubling my money here. And yeah, we're all rolling on the floor with capital gains, watching the bears get absolutely slaughtered. But that doesn't make me feel good, guys. I want to continue to make money. I'm not a financial advisor. I can only show you how I get rich, and I am not looking at Tesla stock anymore. And if you're buying it today, you damn well better have a long time horizon, because I bought it presuming I wouldn't be selling it till 2030, and I'm still holding strong at these prices here, but my shift in focus is moving toward a much healthier direction, and it's just not getting enough love. And no, I'm not talking about the metaverse. Everyone and their grandmother is talking about the metaverse right now, but I'm talking about a company that has a huge amount of exposure to pretty much everything Elon is doing, and many of their business models that just no one seems to be discussing. And of course, we're talking about Google stock, which is trading up 66% year to date, actually following suit with Tesla. The only difference is Google trades at a crazy discounted valuation in comparison. And I'm honestly rattled, because I think they need to do a share split. There is a clear psychological empowering difference when you can lower the price of a stock. Even though the valuation doesn't change, somehow people think, hey, I can come up with a couple $100s and buy way more shares of a small cap company than I can trying to save up forever to buy one share of Google. But I promise you that one share of Google is going to do you much better than probably 90% of anything you're going to pick in your portfolio, except for maybe Facebook. But I want to focus on Google here today, folks. So Google right now, I want to talk about some of these businesses that just the news came out, barely a mention to anybody, right? And a lot of this is going to be in relation to Starlink. I've ordered this. I'm still waiting for my Starlink, but unfortunately, Starlink as an investment isn't going to be coming public anytime soon. This is purely for the mission to Mars and to generate revenue that way, though I think if Elon brought it public, it would easily be a crazy overvalued company, probably getting close to a $500 billion market cap already, and it would probably raise them a lot more capital. There's been debates about that, but you can own it right now. And you can own it through Google, because Elon Musk's SpaceX Starlink here, satellite connectivity deal with Google Cloud, this is going to be one of the largest revenue drivers in the near term, and probably for the next, I'm going to say 5 to 10 years. And I think it's going to materialize in a huge way, as the Starlink Google Cloud capabilities, which include secure data delivery to remote areas in the world, will be available to customers by the end of 2021. Google said in a press release Thursday morning, SpaceX will install the first Starlink terminal at Google's new Albany, Ohio data center. A spokesperson said, adding more plans on the partnership will be shared in the coming months. If they are going to be using Google's global network to basically help supply secure internet and obviously any kind of tools that might be needed, this is going to be a massive competitive edge against something like a Microsoft or an Amazon. And I don't think this is stated well enough in their current valuation, because this alone, I just don't think trades fairly at a 27 PE. But that's not even another huge factor for them. I mean, nobody talks about Waymo, which is the second leader in self-driving. And in fact, the coolest thing about Waymo is they are one of the few competing with tractor trailers, and they are right now letting you rent these things without anybody sitting in the vehicle. Tesla's not even doing this yet, by the way. And again, I think Tesla has the scale capability because the cars are on the road. But again, most of this is probably going to be a huge factor to software value. I mean, Tesla stated that they're going to open source their self-driving technology. Anybody can license it off of them. I think Google's going to do roughly the same. If we just take a look at this, guys, in 2021, Waymo's SF Trusted Tester Research Program begins. We begin allowing an initial group of San Franciscans, that's an interesting way of stating that, to use our autonomous ride-hailing service for their everyday needs while providing valuable feedback that helps shape the future of mobile. So Tesla's doing this by letting the best and safest drivers test out the self-driving and continue to build the data set. Waymo has basically built limited data sets that are highly reliable for safety, and they're basically testing them right now. You can hail a self-driving Waymo. And I don't think this can be stated enough of the value of a business like this. Again, we're not talking about Tesla scale, but the fact that they're number 2 is like Apple versus Samsung almost. Like, I mean, it's going to be a leader, I do believe, in this field. And bringing all of this together, because none of this is real revenue generating for them right now, let's talk about their current business model, the one that you're watching this on, for crying out loud. I mean, Google search and other and YouTube ads, take a look at this. I mean, Google search alone brought in $37 billion for the 3-month end here, guys, for the last earnings report. Google or YouTube ads, $7 billion. Google Network, another just under $8 billion. Take a look at this. From 2020, from $37 billion to $53 billion for Google advertising. Total revenues from $46 billion to $65 billion. This is the growth rate that most smaller cap companies wish they could have. Now, the problem with Google is you have to get over the psychological factor that the stock costs $2,869. This is an argument I have with every new investor, had it with my girlfriend, have it with close friends all the time. People look at something like Facebook. People look at something, anything that is small cap enough where the stock price trades for around maybe $100 to $500 at the most, because that is easy capital for people to come up with. But I will always reiterate that this one share that you might take you 2 months to come up with the capital to buy of Google is going to perform better. And I have a higher degree of certainty that it is a path of least resistance to wealth than probably what you're buying, that you got to sit there and just suck it up, guys, because I wish they would do a split. I mean, obviously not everyone can do fractional share buying, but I just think it's one of the most underrated companies that's currently out there for these reasons, and why it's continuing to kind of be on my buy list. Now, I'm probably going to save up. I've been debating on selling some of my other positions to buy more Google shares. I am really kind of getting into these growth facets, but I don't really call them growth facets. I mean, these are the safest companies in the world you can possibly buy. And I know people are so driven to dividends and some of these other facets right now, but they don't make sense from a business investment standpoint, because the idea is to return as much capital as possible to me over the next 5 or 10 years. I look at getting a 30% growth rate. That is what I've averaged higher than that over the last 7 years. This is not to brag. It's not to be cocky. It's just something that if I can continue to do, I want to make sure I keep doing it, because to take that money and just say, hey, I'm going to park it in a 4% yielding dividend stock and make $1,000 a month sounds great until you look at my corporate account that is trading up something like 30 or 40% in the first 6 months and has already made me a half a year's salaried income at a regular job. That is what I'm trying to continue to focus on in my younger age of only 29 years old. And I think this is going to be a prevalent position that will reinstate that, rather than buying something like a Tesla stock here. Now, I only tell you guys what I'm doing. I'm not a financial advisor. Again, I'm not trying to brag or anything. It's just my journey, and I hope you're enjoying it. Let me know what you think in that comment section below, folks. This has been a quick overview of why I think you should be buying. Well, I'm going to be buying Google stock. I don't know what you're doing, but stay cool, stay awesome, and I look forward to catching you tomorrow.